With the steep pullback in the markets in March, how are juniors faring? I have with me Ryan Hanley. He's Vice President Equity Research at Laurentian. So, Ryan, what has been the impact for juniors since we've had this steep pullback in March?
So it's been pretty varied. In terms of the actual equities, I think they've been hit just like everything else has. And we've seen some of them start to recover over the last couple of weeks here. But I guess going into it in a little bit more detail, you've seen a lot of the exploration companies, I guess, deal with the challenges of you've got government-imposed shutdowns and really just logistical related things. So I'd say maybe the province of Quebec, you've seen exploration has basically come to a halt. And the same thing in Mexico, some South American countries. So it's been a reduced level of activity.
You're looking at a number of juniors. Is there any particular type of theme right now? Is it just that they're doing less drilling, or is there other activities that they're just not up to?
So for the most part, it's for a lot of these companies, it's the drilling that's been shut down. I'll use Quebec as an example. They had restricted all mining activity, and then just recently they announced that things would be restarting. As far as I've heard, that seems to be mostly just mining operations. So we've seen announcements out of El Dorado, Agnico, and companies with mines in Quebec. However, on the exploration side, those companies have not yet been given the green light. So a lot of them are still on pause right now.
Do you see any trends right now? Because there's been talks about how would you say we're in transition, whether it's essential service or non-essential service. Do you see things starting to pick up?
Yeah, it's been a little bit of an interesting ongoing conversation. Every level of government and governments around the world seem to have very different opinions as to what's essential and what's not essential, and that's been hitting a variety of different companies and projects. In terms of trends and themes for a lot of these companies, I'd say the ones that are unable to get any drilling done right now, it's a good time for them to take advantage of doing a lot of the desktop work. So you can have your team go through and have Zoom calls like this and update exploration models, get all your targets ready for when things do ramp up again. And then you can also advance economic studies, things of that nature. So we've seen a few companies that we cover and that we've got on our watch list able to take advantage of that. One of the companies, Core Mining, was still able to get a PEA out, and they're still moving the ball down the field. So there are certain things that you can still get accomplished, even though the drilling activity has been suspended.
These juniors depend upon actually generating news, what they're doing, or the drill results, or how they're advancing the project. Has this impact been very detrimental? Do you see that there's going to be really reduced news flow coming out, or have they been able to adjust quickly in terms of what they're doing other types of work that might still advance the project?
Yeah, so in terms of news flow, I'd say that overall there's been a general quiet period. A lot of these companies, I mean, if you're doing desktop work, there's not a whole lot of news flow that's going to generate, with the exception again being things like economic studies, PEAs, things of that nature. So it's been a lot of, I guess, quiet overall in the sector from a news flow perspective. I think that once things once exploration programs start up again, then that's really where you're going to see a lot of excitement. Unfortunately, it doesn't look like that's happening in some places for at least another few weeks. So they're going to have quite a bit of work to do. But in the interim, yeah, I'd expect to be pretty quiet.
There's two different things. There's the market, which is looking quite rough right now, especially since of March. But then again, we have these great looking gold prices. Are juniors going to be able to take advantage of this?
Yeah, absolutely. I think that kind of looking at it from a macro level, you've seen trillions in stimulus in the U.S. You've seen tons of stimulus coming out from the ECB and other countries around the world. You've got near zero rates. So really your real rates right now are negative, which is quite good for the price of gold. So I think that that's a good level of support for all these guys. Obviously, the companies in production are going to be generating higher and higher levels of cash flow. And the other thing to keep in mind as well is, given what's happened in Canada with the exchange rate, we're now sitting at around $1.40. So you've got a really high Canadian dollar denominated gold price, which I think as of right now, you're about $2,400. So A lot of companies are going to be able to take advantage of that on the operations side. Looking at, we cover New Gold, and you've got 90 to 95% of their costs are in Canadian dollars, so it's a great advantage for them. Going down to the exploration type names, again, there's a lack of quality projects out there, just because we've come out of a cycle of depressed gold prices, not a lot of exploration spending. So I think it's going to be interesting to see a lot of these larger producers going out and picking up new projects to fill their development pipeline, or even just going in and taking a toehold. We've seen quite a few companies go in and buy 9.9 or 19.9% of projects that they find interesting. So we might see more of that as well.
Do you see again, like we were kind of we were doing share buybacks, it seemed like, before we kind of came up to this, but there could be an actual change in terms of the way that companies are looking, the larger seniors, in terms of exploration and feeding their pipeline?
Yeah, I mean, a lot of these companies, like I mentioned, have started, I guess, to take toeholds in some of the exploration guys, and they've started to slowly grow exploration budgets. We haven't really seen any substantial growth in any of the companies that we cover that we've talked to in terms of big jumps in exploration spending just yet. But what has been interesting is more this new angle of these producers going in and taking equity stakes of junior companies, and in some cases developing things like joint technical teams so they can help out with designing exploration programs and making sure they're getting the most out of every dollar that they've got.
We've all been adjusting. We're taking this meeting with a Zoom meeting right now. Is there anybody that stood out in terms of like they're adjusting or they're innovating, or something that has actually come up that's actually been different with the companies that you're dealing with?
I would say there's a few cases where I think it's trying to make the best of the current situation. And again, I mean, having companies like some of the junior guys that we cover, Radisson being one example, you've got time to actually go through and revise your exploration model and kind of take your time to make sure that you've got the exact targets that you're after all developed. You're not doing things on the fly as much. So it gives you a bit of a window to do more planning. And then, as I mentioned earlier, you have a few other companies, Core being one of them, where you're still able to go out and publish economic studies, because all that can be done remotely and by conference calls. So I think it's a bit of the innovation is maybe just working from home and adapting to doing more of these types of conversations, as opposed to flying around and doing everything in person.
Ryan Hanley, thank you very much for your time.
Thanks very much for having me.